Yeah, so we're live. Oh, yes. I
Right
forgot
now?
to tell you what the topic was.
Yeah, it's kind of nice to know.
It's off-market apartment building investing with Sarah Coupland.
Oh, okay. I didn't. All right. I was not necessarily prepared for that, but
That's okay. Did
I
you
can wing
buy?
it.
Did you buy? How many of your properties did you buy on market versus off market?
Most of our multis have been on market.
Oh, interesting.
Yeah. Yeah. So there was one, the 12plex the 12plex that we bought was kind of off market. It had been on the market and then it was off market.
Mhm.
And so I reached out, a couple of years after initially going to see it to see if it was still for sale. And it just happened to be that, they hadn't sold it yet and they were willing to still sell it for the same price that they were looking at like years before. So,
Right. That was a couple of years after it was delisted.
Yeah.
Wow. Okay.
Yeah. Oh no. And then sorry. And then I bought a sixplex off market.
Uh-huh.
Okay. I have to go through my properties and think what I
That's
bought
okay.
off market.
I know it's hard. Susan was the best because she had no idea how many properties she owned. So you're in good company.
Yeah. I wholesaled an off market deal. I didn't buy that one. I wholesaled a couple of I've wholesaled more than I've actually bought off market, I think. So, yeah.
Actually, that's a good question because I don't think we've asked that many times. How do you go about making a decision to wholesale versus to keep it yourself?
It kind of depends on what we have going on at the time. So, there was this one property that I really, really, really loved, and it was in Trenton, and it was a 14-unit complex that was a complete disaster. And the price was right, and it was like on the water, and it had these 4 duplex cottage style units, and then it had a larger multi-unit building as well. And I actually took a few joint venture partners through it. Mm-hmm. And at the same time, I took my husband and some of my reno team through it. And they were all thinking that I was absolutely crazy for wanting to buy it because it was in really, really rough shape. Mm-hmm.
But the price reflected though, right?
Yeah, like it was a great deal. Right. The price reflected, I can't even remember what the price was right now. I'd have to pull it up. But the after renovation value, like the majority of the units, the 14 units were vacant. I think 3 were occupied. So you could just go in and start doing the reno. And it was a big, big job. I believe the person I wholesaled it to is still working on it. I think a year and a half later. But the forced appreciation that's going to come from it, from actually going through and renovating it and increasing the rents, it's a fabulous property. And at that point, I took a couple of potential JV partners through. And that's the thing, when you're working with JVs, sometimes they don't see the same sort of vision. Like I see these really rundown, decrepit buildings, and I think, wow, this is a great opportunity. And I know that my team can handle it. And I know that we have the skills and expertise to be able to carry out that kind of a reno. But multiple times I've taken JVs through these multi-unit properties that are these big projects, and they don't like them. And it seems too risky for them. So what I try to do now is do those big, scary kind of projects on our own, and position ourselves so that we can do them on our own versus trying to find JVs for them, because not everybody has the same sort of, I don't see it as too risky, but other people see it as riskier than perhaps what I do. And then at that particular time as well, I could have kept trying to work the deal on our own, but at the same time, we had an opportunity. I saw a presentation, can't remember who it was, but they did a presentation on your return on lifestyle versus return on investment. And I thought, okay, I could put my own money into this project and we could just buy it on our own, which my husband was like, I don't want any part of it because it's a lot of work and he could see himself just being there forever. Or I could take the return on lifestyle. So I actually bought this place where I am right now. We bought our cottage instead. So I wholesaled that deal to somebody who also has a renovation team and can kind of handle that sort of a project. And so I made money on that deal and I wholesaled it. And then I took my money instead and I bought my cottage. Right. So I took the return on lifestyle. So that kind of was the deciding factor on that one. Sometimes I am not necessarily in a position to close quickly, or I have multiple opportunities on the go at a time. And so I kind of pick and choose what is sort of more suitable for me, and then I'll wholesale. Like I wholesaled a sixplex one of my clients was selling. Mm-hmm. So quite often I get wholesale deals, or I get private deals that come to me through my property management company where my clients are actually looking to sell. And so they come to me first because I always say, hey, if you're looking to sell, talk to me. Mm-hmm. And then if I don't purchase, then I'll wholesale that off. And usually it's if I have something else on the go, or if it's like really quick, I'll wholesale it to an investor who can perhaps put their stuff together quicker than I can because I'm not always up to date on my taxes and right. So all that kind of stuff. So
actually, I'm sure some listeners are already thinking this. How can they get a hold of you if they want to be acquiring a wholesale multifamily from you?
I would say
please don't give your email address.
Don't give my email address.
Websites are best.
I don't have an investing website up yet, and I know I'm kind of slacking on that. That's one of my summer projects.
Let's give you a property management one.
Yeah, so my property management website is just tagproperties.ca. So tagproperties.ca.
Excellent. And so folks who are driving will have the URL and the website in the show notes. Sarah, can you show us your place?
Sure, I can.
Awesome.
I didn't prepare to show it to you, so it's maybe not as tidy as I would want it to be, but
just show us the view.
This is what's that?
Well, cottages
show you the view. Okay.
Cottages are largely around
just
location.
Just you around so you can see. Uh-huh. So this is my living room. Can you see it? I can't see what you can see.
Okay, that's better.
Okay, was I showing you my ceiling?
Yeah.
Okay, so this is my living room.
It's pretty big.
The main floor. It's huge. It's as big as my house. It's basically a house. So this is our dining area / TV room. Uh-huh. We play cards or we'll eat dinner here, but we spend most of our time outside. So it's my living room. Uh-huh. I'll take you outside. It actually has been thunderstorming all day. Here, I'm going to take my keyboard off because this is totally throwing me off.
It looks so nice. The weather. For anyone who's listening, this is all posted to YouTube as well if you weren't aware.
Yeah. So this is my favorite part. And so this is our little sunset dock. You're back? Okay. Mm-hmm. So yeah, so we swim out here. Oh, our unicorn got flipped over by the storm, but so we have 240 feet of waterfront.
Holy cow.
So I'll walk you this way.
Wait. So instead of buying that 14plex, you bought this instead.
I did.
That was the exchange. Okay.
Yeah, so I bought this place instead. So we're basically spending the whole summer here, and I work from here remotely in the mornings usually each day, and then we hang out pretty much all day. We have company up every weekend. Mm-hmm. So this is the other side of our property. And we have a little beach down here, so my daughter likes coming down. We've got like sand toys and... Oops, sorry. My husband has a goose deterrent water sprayer thing on. And
that's awesome.
So we get geese up on our property. Yeah.
This is a first on the show this is our, where someone's been sprayed with water on the show.
Sprayed by a goose deterrent. So there's my boathouse. It got a little beat up over the winter. The ice flow kind of pushed it in. There's Wayne our jet ski, and then our little beach and waterfront. So, and then there's our cottage from here. And we have a 2-car garage here, too, which is pretty cool. So we turned it into a games room. Uh-huh. So it's got darts and ping pong and a whole bunch of other stuff in there. It's pretty cool.
People are laughing on the stream.
Because I got sprayed by the sprinkler.
These are the truths about real estate investing. That's actually a good tip. Because I've been recommended that before from other people who grow vegetables in their garden. You have it's like a motion detector for your hose, right?
Yeah. So there was one morning I woke up here and we had about 30 geese on our property.
Ooh, that's a lot of poop.
Because there really aren't a ton of grassy cottages, I guess. It's a lot of cliffs or a lot of like forested areas. Mm-hmm. So they come up on our beach and then they were like spread out over the whole place, like 30 of them. And I was like, oh my gosh, there's so many geese. It was so cool. Mm-hmm. And then I walked out and our whole yard was covered with goose poo and it was disgusting and it took forever to clean it all up. So now we're trying different ways to actually get rid of them. So
I was just trying to think what the landlord application would be. I was wondering if landlords get excessive dog poop on their property and they can do the same thing.
with the hose.
The problem is it doesn't differentiate between humans and dogs, so you might be hosing your tenants by accident. So maybe bad idea, folks.
or yourself if you show up at the property and you forget that it's there.
This is so funny.
Yeah.
So I actually love that you brought that up because I've been using what I call return on grief. You're talking about return on lifestyle, very, very similar things. I think mine was more like more in the moment. Yours is a bit bigger thinking, but both are similar. And I think a lot of investors forget that. They get lost in the spreadsheet and the opportunity and the commute. They forget about the commute. Like a lot of us got into real estate, so we could stop commuting. Yeah, how far away was that property for you? The 14 unit that you wholesaled to our friend.
It was about an hour, and we typically invest within 20 minutes of where I live.
Big difference.
I don't have a single property that I have to drive further than 20 minutes for, except for this place. We rent this place. I don't Airbnb, but we have people up here who take care of stuff. So I don't actually ever have to drive here unless I'm going to stay here. So, 20 minutes. Like I invest in Port Hope, Cobourg, Colburn. All of my properties are really super close and you can hop in the car and be there in 20 minutes. I don't want to have to commute super far. Although I am starting to look at possibly purchasing multi-units in other areas that are a little bit further away, but I think I would only buy multi-units out of my area because then I would have a live-in super who would be on site, who could be my person there. So I don't actually ever have to go there, except for maybe occasionally. But
for those who don't know, what are the economics of a super? At what building size do you start?
So we do things a little bit differently with a super. So,
I've seen it all over the map. I've seen supers don't even live in the building.
Yeah. And so I don't necessarily like the traditional form of superintendent. And I kind of ran into this when, because I had a number of clients who had larger buildings who had superintendents. And so great, their hallways were cleaned and they had somebody on site. But supers are not necessarily going to be good tenant relations people, right? So what I was finding again and again, these people are coming to me looking for, okay, hey, I've got this problem. I've got this issue. Can you help me? Or my super is picking terrible tenants. We need help. So they didn't necessarily need full property management from my property management company, but they needed some help because they had a bit of pain in and around their tenant relations sort of stuff. So what I figured is I'm like, well, the traditional form of super where they do everything, I think is not realistic because, if they're great at maintenance and they're great at cleaning, they're probably not experienced in tenant selection and having good relations with your tenants as well. So the way that I've kind of structured it with my buildings and also with the buildings that we do full management on is that our supers are only responsible for hands-on stuff. So like my 12-plex, for example, our super there, we pay him a lump sum a month. We don't give them any sort of discounted rent because we want to make sure that they're paid for what they actually do separately. And he's responsible for cleaning all of the common areas. He cleans our laundromat. He empties the lint on the dryers. His phone number is on the wall in the laundromat. So if there's any issues, people call him. They don't call me or our property management company. He delivers notices for us. He'll show apartments, he'll do smoke alarm checks, but he doesn't actually do anything with our tenants. Our property management company handles all of the tenant relations stuff. So we know that our screening process is being carried out the way that we want, and we're selecting good tenants that fit with our profile. So I've rolled that out with the other larger buildings that we manage. Over time, I've been able to sort of convince the owners that, you know what, you don't necessarily need to pay all of this money for a super. Like we had somebody with a 24-unit building, and they were giving their supers $500 a month rent, and then they were also paying them on top of that. And so that actually equated to, I think they were making about $1,000 a month, these supers, and they weren't necessarily doing a super fabulous job. So we've switched it over now where there's somebody in that building who gets $300 a month for doing all of the cleaning and being kind of like a person on site. And then we take care of everything else. So it sort of helps, it flow a little bit better because we're managing the super to make sure that everything is done appropriately, but we're also doing what we do best, which is tenant relations.
Right.
So it kind of works out really nicely.
Interesting.
But Like I don't have supers in my sixplexes. Like we have a cleaner on staff who is in there every week or every other week. So she kind of keeps an eye on the building, and then our office takes care of all the tenant stuff. The 12plex, it's 20 minutes away. And so I hate driving. So for a 12plex, and especially it has a laundromat as well. So we have a super there, and he does all the cleaning and everything. Mm-hmm. But yeah, I'd say anything probably 8 or bigger, maybe have somebody who's kind of on site for you.
Fascinating.
It's not a bad idea.
Yeah, first I've heard how you've broken up the rural super, how you've really narrowed their focus. Rather than most supers I've seen, they usually have a very broad job.
Yeah. And ours, it's like you just do this, and we take care of all of the relation sort of stuff. Because then you run into like super and tenant like conflict and relationship issues, and you've got somebody living in the building who's telling other people what to do, and sometimes they power trip, and you want to make sure that everybody is doing what they need to be doing, but at the same time there's a certain level of customer service that we still like to provide, right? Mm-hmm. So keep everybody doing what they're good at, and it all works out really smoothly. It's been working really well that way.
I remember when I was looking at a building to buy, and I met the super, and she was a small, elderly Eastern European woman, likely an immigrant based on her accent. And she was very short and curt with people. I believe people called her the super Nazi. So not necessarily your client relations person.
Yeah, not somebody that you want, not somebody that you want, especially if you've got really good tenants. Like she might be a good person if you have, like if you're buying a building and you have tenants who are not necessarily the profile that you want, maybe having somebody short and curt's okay to deal with people like that. But yeah, not everybody who would be a good super is necessarily good at relations. So
she ran a tight ship. So she touched up, painted, vacuumed, and kept people on task and called people out if they're being whatever, wearing muddy shoes, right? Because a lot of these halls are carpeted, for example. So that's someone that deserves to be called out.
Yeah, we have my one super. He kind of goes above and beyond a little bit, and he'll go and knock on people's doors and be like, hey, and I'm like, and then we get complaints. It's like, so-and-so is harassing us about this. And I'm like, well, you shouldn't be doing that. But at the same time, he should come through us, and our office should be calling them, right? Like our office will contact them as opposed to him having to deal with it. But I think he can't help himself sometimes. He's like, oh, you're not doing what you should be doing. And he goes and knocks on their door. I'm like, no, let us handle that.
I still love those people on my team. People who have a sense of right and wrong, strong sense of right and wrong.
Oh, no, it's wonderful having him because he reports everything to us. But sometimes he feels he should take things into his own hands.
Awesome.
I'm like, don't, because we want to keep the peace.
Those are often my favorite property managers. People who are just like right and wrong.
Yeah.
So what city do you invest in? Sorry, where do you live? What city do you live in?
I live in Cobourg.
Okay.
I live in Cobourg, so we're about hour and a half, 2 hours east of Toronto, in the little village of Northumberland. So like Cobourg's a little town, beautiful beach. We have about 18,000 people. I grew up there. Yeah, it's just little. So I invest in Cobourg. Port Hope is the town just west of us, and then Colborne is 2 towns east of us. So it's a very small town investing. And I think that because of the size of where we live, we've had to get really creative with what we do. Like we don't just stick to one strategy. We look at a variety of different opportunities, because like if I just waited for my one strategy to have properties available, and then I might be waiting a while. So we're kind of positioned with our learning and what we do to be able to take advantage of various different opportunities as they come up, because like we're in a small town, so it's not like we have our pick of our pick of investment properties, right?
Right. Yeah, but the other side of it is that you seem to be able to do more transactions than most multifamily investors are, who are even transacting in much bigger cities. It seems to be a lot. Maybe it's just because there's more eyes on the bigger cities, more people chasing the same thing, versus like I said, like you're able to uncover deals on a much higher frequency.
Yeah, and it's actually interesting, and I think that you're right about that, because my friend Michael, he'd actually pulled a report of investment properties that had sold, and this was a few years ago, and to see who's buying property in this area. And my name was the only name that showed up on the list more than once. So there are not a ton of investors in my area who are just, buying stuff up. I'm my biggest client for my property management company. We're professional investors. And I think that, small town, there's not as many opportunities per se, but there's fewer people taking advantage of them. Like that 12-plex that I was talking about that I bought, and I'd gone to look at it. I was brought in as a consultant for people from Toronto who were looking to purchase it, and I was brought in as a property management consultant. At that point, I wasn't buying multis, so I wasn't really interested in it myself at the time. And it sat on the market, I think, for probably a couple of years, anyways. And then nothing happened. They pulled it off the market. And then a couple years later, when I contacted them, it was still there. Because I think investing in this little village of of Cobourg, its population, I think like 5,000 or 6,000 people. Like, it's teeny. And I think that it scared people because, some of the big organizations are like, here are the top 10 best places to invest. And you need transportation and you need this and you need that. So a small town like that is not necessarily something that a lot of big investors will recommend. But we've done really well with it. Like, we picked up a 12-plex for $585, and I got him to throw in the laundromat. I said, I'll give you your asking price, but I want the laundromat. And he was like, okay, cool. The laundromat's yours. And now in 2.5 years, we've renovated 6 or 7 of the 9 residential units, and have updated our laundromat. And I just had it appraised for $1.12 million, and we bought it 2.5 years ago. So the opportunities are there in the smaller towns. I think that maybe they're just not as scary as people think. Like, we've done very well with it. It cash flows. Tenant profile is a little bit different, but you go into it kind of expecting that.
I'm just thinking out loud, but with the small towns, the cost of labor definitely the cost of materials construction is not that will be the same as anywhere else. So the replacement costs of your buildings are still extremely high. Right? Just think, to build a 12-plex, how much would that cost you? Plus land, right?
I have no idea. Yeah.
And you really think anyone wants to get into that?
No.
So then you have pretty high barriers of entry. And as long as people are still coming to the area to live, you're probably good.
Yeah. Yeah, like the price, and if you look at, say, I don't know, like you're in Hamilton, what would a 12-plex in Hamilton cost?
12-plex could be $15 million. Sorry, it could be.
Yeah.
Yeah, it could be over. It could easily be $100,000 a unit, easily.
Yeah.
If they're bigger units, how big? 2-bedroom, 1+?
Most of them are 2 bedrooms. Yeah.
Yeah, so that could easily be $150,000 a unit.
Yeah. Easily,
if it's really nice, way more, it could be $200,000 a unit. Right. And then, how are you doing cap rates? Are you evaluating cap rates as part of your acquisition process?
Yep.
What kind of caps are you looking at?
Here we're usually getting between 5 and 7.
Wow.
Yeah.
No kidding, eh? That's still quite low for a small city. Because here it's usually 4 or 5 if you can get it. And usually it's lies. Actually, while we're into it, what lies have you seen in advertised cap rates?
Well, they don't include all of this stuff, right? Like, so I've got like my spreadsheet, and it's like, okay, like they don't include, snow removal, garbage removal.
Well, those don't happen. Those don't need to happen.
Those don't happen.
The animals take care of that.
Yeah. So people can put the numbers however they like, right? And that's why we have to ask for a lot of supporting documentation when we're purchasing, because like I want to know exactly what you're paying for everything. And then we also factor in kind of like through our experience. All right, so you're putting down, okay, you've got Joe Blow down the street cutting your grass, so you put an X amount. Well, I'm going to probably have my company that's doing it. They do all of our properties, so I go and I change it up and I put in my own costs as well. Because, if somebody has, some kid cutting the grass versus if you're going to use a professional company, it's a little bit different. So knowing what the actual costs of things are versus what they're giving you is really important too.
Where did you get your spreadsheet? Do you sell yours or anything like that?
I
Because folks need
have.
checklists when they're taking on any sort of something this big, especially if they're new to this.
So so I have various different spreadsheets that I've kind of created over time. Oh, cool. So, well, because it's all different. It all depends, right? So I have like spreadsheets for buy and hold rental properties. And then I have spreadsheets basically like if we're going to do a reno, like if we're going to convert something and then do a reno, what does it look like if we sell it? What does it look like if we keep it? What does it look like if we bring in a JV partner? So usually when I analyze a deal, I start with like my main spreadsheet where I input everything and then I copy it like a whack of times. Then I go through all the different sort of scenarios. And then that's sort of how you'd asked before, like how do I decide if this is something I keep or if I wholesale? I have a minimum return on my money that I need before I put anything of my own into it.
Right.
If it's a very complicated sort of deal, then we'll try and keep it ourselves. But again, it has to be worth our while. So it works out like my return on our own money invested. And then we kind of go from there as to what does it look like if we bring in partners? What does it look like if we sell it or refi it or whatever? So for my multis, it's honestly a very, very simple spreadsheet. Well, and then we look at projected rents versus what the rents are, because there's upside. Like when you're buying multi-unit properties, you don't buy for cash flow today. And that's maybe one of the biggest tips that I could give people. You're probably not going to cash flow. So like the 12-plex that we bought, it was about 2.5 years ago. We haven't taken a single penny out of that building. And we didn't expect to when we bought it because it did need a number of repairs. Like we've had to replace all the windows in this old century place. So even though the value has gone up considerably, we've also put a ton of money into it. We haven't had to pay for any of our own pockets because our cash flow has all gone to that. And we've been doing the renovations as money comes in, then we pay for it out of the proceeds of the property. But I know, like you hear some people, even like with duplexes, they're looking for like $250 to $500 a month in cash flow. You don't buy a multi-unit initially for cash flow because typically you don't bank on getting anything. So we keep a reserve of 10,000. So we keep a reserve of 10,000 because you don't know what's going to come up. And then anything over that we put back into the building. Once the building is fully and completely to where we want it to be, we would normally refi and then we can pull out money. And that's kind of how we would get paid, is through pulling out equity, which is great because you don't pay tax when you pull out equity. So that's kind of where you get your flow of money for multi-units, is when you actually do the refi. We're not refinancing right now, but I'm actually buying my partner out of that one because he's decided that he wants to move along. So we're technically refining, and then I'm gonna own it completely. But yeah, you don't buy them for cash flow, but you're looking at the upside. So, for example, if your rents are under market, which often they are, like if you're getting a good deal on a multi, and anytime I'm buying a property, I want to be getting a good deal. I don't want to necessarily be paying market price. Or I want to be buying something that nobody else wants to buy because it is in bad condition or it needs a lot of work. Because that's where we make most of our money, is on when we buy the deal. And then we force the appreciation and we increase the rents as that happens. And
And just to clarify that, because I find a lot of beginners are missing that point on the making money when you buy. Like you almost bought a property that your own team didn't want. Let alone the market. Right? So understand, folks, when you make money in the buy, often it is the property that folks cannot finance. Nobody wants to touch it. Usually smells like cat piss. It can smell like a whole lot of other worse things. And 9 out of 10 people will say, we're not touching this. And then that is usually where the value is. Right.
So you're getting a deal, but you're also you're getting a deal to solve other people's problems, right? So you're taking on those problems. Like I had a triplex that we bought a couple of years ago. It was on the market forever, so I went to look at it, and it was crazy. Like there were tenants in it, and the reason it hadn't sold is the tenant profile was so terrible. Like nobody had paid rent in forever. This one tenant had mental health issues and had literally, I should show you a picture sometime, Aaron. It's kind of crazy, but like the entire set of walls in the living room, various different forms of Sharpie and pen. And he just had like crazy writing all over it. So like the entire wall was just covered, and he kept a hammer hung in the wall. And when he got frustrated or upset or whatever, he'd just take the hammer and pound at the walls. So there's like all these holes in all the drywall. And anytime somebody would go to look at it, he would just stand there and scream at them. Mm-hmm. And so nobody wanted to buy it. And the current owners, they weren't in a position. They didn't know how the LTB worked. They didn't know how to file proper forms. They really didn't know how to deal with the situation. And so I went to them. I said, look, I'll buy it. Here's my price. I'll give you free property management to help get your tenants out if you accept my price. And we'll close when the tenants are out. And it took us, I think, 5 months to evict and get the tenants out.
Wow.
And then I was able to take on the property. But nobody else was going to buy that property. Right. I had to sit down and find out, okay, what's your challenge here and how can I help you solve that? And I'll do that if you give me this price that I want. And it kind of works out that way.
So your solution offered a lot of value.
Yeah.
Hence you were able
to so they were willing to drop their price for my help. Yeah.
So listeners, I want you to understand this part. So, here's the beginner mistake. Property hits MLS on a Friday. They're there to see it Saturday, and there's like 5 other offers, and they think, oh, we gotta make money on the buy, so we gotta offer like $40,000, and they're asking. Folks, no, that's not quite it. There's 5 offers, and it's too pretty. Sarah's not talking about that sort of stuff.
No, I'm literally talking about the properties nobody wants to buy, except for me. I love those properties.
Well, that's what the value is, right? I had
it is, yeah.
My architect took pictures and videos of one of my last property, showed it to his mom, which was a mistake, and mom said, "If you ever buy a property like this, I will not help you with it." Right? Oh. That's where the money is. Yeah. And mom won't help you.
Well, and I think you have to be careful. Like I've run into that with joint venture partners as well. Like I had 7-plex I bought last year, and my JV partners backed out, and it wasn't even a big. Well, it was a big run. We were tearing apart a 4-bedroom unit, but I had my JV partners lined up, and I learned my lesson. I didn't get any money up front, and I didn't get a signature on anything up front. I just kind of, up to this point in my career, I just kind of take people at their word. And I had these JV partners, and they were lined up, and yes, they wanted to go ahead on the 7-plex. And so I invited them to come to the inspection. And I shouldn't have done that, because then I think the gentleman was on board, and his wife came along, and I don't know that she was a very savvy investor. And they, after the inspection, they were like, okay. And then I got an email, you know what? We just don't think that this is the right property for us. And I'm like, oh man. So
if the spouse says no, it's a no.
Yeah.
Doesn't matter the level of experience.
Yeah. So we actually ended up scrounging at the last minute and having to pull all of our own money. So I had to put every penny that I had and then some, and then I borrowed on my lines of credit to close on the property because my partner backed out and I didn't actually have anything in writing with them. So I've learned my lesson going forward. I need to make sure that they understand what's going on and have it in writing.
That's actually a great lesson for anyone who's listening. When you're showing partners, in my case, it's often clients. I remember showing this one client 5 great properties with his wife, and then we didn't offer on any of them. And then the feedback was, his wife could not see herself living in any of the properties. Understand that...
and you're never going to.
Yeah, you're never going to. But also understand is that they're very wealthy. Like he's a successful doctor. Where they live does not look like our investment properties. Think of your nicest investment property. That's not likely where a doctor and their family's going to live.
Yeah.
Right? So
yeah, it's
people have to get that out of their head.
Your own expectations of it, right? It's like you really have to look at who your tenant profile is going to be. Exactly. And then also like have a vision for it. Like I look at something and I see the vision of what it could be. And it's hard for people to get past what things look like before we go in and gut them and renovate them. And I can show them like our before and after of the things that we've done. But sometimes it's hard for people to really kind of see what I see when I look at something. And it scares them a little bit thinking, oh, you're going to buy this. Yeah, I'm going to buy this because the price is perfect and we can make it wonderful. And
if anyone doesn't believe me, go show someone like steak, where steak comes from. And I think we'd have a lot more vegetarians. But Sarah, like your business is quite end to end. So you're getting leads from your property management business. and then you have a property management business, so you're saving, that's left pocket, right pocket. As you make money from your property management business, that's still your money, versus most people are hiring that out. And also your renovation folks are your employees as well.
Yeah, so I have a full reno company, and they do all of the work on our properties.
Right.
And then if I have availability to help my clients, so we've done a number of unit renovations for my clients as well, because I don't always have a project on the go, or we might have a couple of months here or there in between, or at one point I had 3 different crews on the go at 3 different properties. So we do renovations for our clients also.
Right.
Yeah.
My point is that this is like true professional investing, where you have savings all through the life cycle of your investments for yourself and your joint venture partners.
Yep.
And also for your clients as well, because you've got it all in house, which brings you don't have to pay as much overhead, like for example, like a general contractor.
No, yeah.
Right? You don't have to pay
we save
for a property manager, all those things. So that for anyone who wants to be professional, that's what it looks like. But this is how you get cost savings and how you get higher margins. So you have to. So I'm having to tell people more often is that you have to have a serious conversation with yourself if you want to be like Sarah.
But it wasn't like, and right now it's really easy for me. So there was a point probably 2 or 3 years ago where it wasn't easy. Like I was my only employee in the property management company, and I was working like 60, 70 hours a week, and I was going crazy. Right. I was my accountant, my bookkeeper, the property manager, the on-call person. Like I did everything.
And a wife and a mom, right?
And a wife and a mom. And I was going crazy, and I was getting burned out. And then so I started hiring staff, and it took me a long time to find the right staff, and then take all the processes that were in my head and I'd never put down on paper and get that together. And now the property management company is working really awesome. Like I've been up here at the cottage for just over a week now, and I've had a couple of text messages, and I've had a conference call with my staff. And aside from that, I'm not really doing terribly much with the property management company because they can take care of it and they deal with it. My renovation company is getting to be very much along the same lines. We've had some very consistent staff there. They know exactly what I want to do. We're renovating this apartment. Okay, you're going to do it exactly the way you did the last one, right? So we're going to use the same tile, the same floor. Like my vision is the same. It's different when we get into bigger renovations when we're taking out walls and we're moving stuff around and whatever. And then I'm a little bit more involved because then I do the scope and I kind of do the planning. And I tend to work with our designer and architect. But aside from that, if it's a simple, hey, these tenants are moving out, we're going to spruce this place up, they can just go to it. And I don't necessarily have to be too involved because I've already put all of that work in the beginning, right? I've already developed the plan for kind of how everything goes and what we do and how we do it. So
this has taken years to put together, right?
Yeah, like I've been investing for 2 years now. So we've been renovating for 12 years. Well, how I started is I couldn't afford to buy a house. So my bank, I either needed a spouse or another set of income. So I bought a duplex. It was $140,000, and it was disgusting and terrible and gross. And we tore the whole thing completely apart. So in that process, my dad, I met my husband while we were doing that process, and my dad taught us how to tile and do plumbing and drywall and all that kind of stuff. So for the first, I would say, 5 or 6 years, Jamie and I did all the work ourselves. So like I was a financial advisor at the bank, and I'd work like 8 to 5. And he'd work 9 to 6, and we'd grab Wendy's and we'd go meet at the apartment, and we would basically renovate until like midnight, 1 o'clock in the morning, and get up and do it all over again. And we'd renovate on the weekends, and we had no life at all ever when we were doing our renovation projects. But that's how we built the base for us to be able to continue doing what we're doing. So we just kept buying those nasty properties nobody wanted and putting in a ton of sweat equity. And then after we had our daughter and I started my property management company, I said, that's it. I'm not doing drywall or tiling. I'm not doing any of the renovation work anymore. We need to start hiring people. And so we took on a big flip project, which I actually ended up keeping as my own house because I really loved it. And we hired a whole team at that point, and we've had the same guys with us since then. That was in 20 2013, and we've had all the same reno staff since then. So, and I've hired a couple of people since along the way, but
I was going to ask who your first hire was, but it sounds like it was your husband.
Yeah. Well, I basically said, I was like, okay, I bought the property and then I closed, I think 2 months after we started dating. And then I said, okay, well, if you want to keep dating me, you basically need to bring work boots and show up here. Because otherwise you're not going to see me for like 6 months because we're renovating.
That's free labor, eh?
Yeah, so free labor. And so he was there. He helped with the renovations and so he put time.
What was your next hire?
Yeah, so I think he would have been my...
for
a long time, actually. Yeah, so and my dad. So like my dad, he was kind of free labor too. He was just kind of helping out. He wouldn't take payment. So, and neither would my husband actually. So they both just kind of worked for free. My first hire would have been with my property management company. I hired somebody, a virtual assistant, to kind of help me out fielding phone calls and doing a bit of bookkeeping. So that was, I started the property management company in 2013. So shortly after that, I would have hired somebody.
How did the VA work
out? Really good. Actually, she was local. I think she lived in Bowmanville or Curtis. She was a recommendation from a client of mine, somebody who was already using her, and she was wonderful. She was really, really wonderful. But she was VA for a number of different people. And as my business grew and as I kind of needed more help, she didn't have the capacity within her schedule to be able to take on more. So at that point, then I ended up hiring somebody in my office, which was in my house. So I started having staff come into my house because I worked from home. That had a number of challenges in itself because, when people are coming in at 8:00, I have to be up and I just couldn't wear my pajamas to work every morning anymore because you have to set an example and people coming in. And we operated the property management office out of my house up until about a year and a half ago.
Very cool.
So when tenants started just randomly walking in my house at any time of the day, I was like, okay, that's it. We need to actually have an office because this is not cool.
Because your daughter's there at home too.
Yep.
Can I ask, how do you structure splits with joint venture partners? Because apartment buildings are different. It's way more capital, for example.
Yeah, we still do 50-50. Oh, okay. Well, on my first JV deal that I did was on a private sale sixplex, and that's when I actually ran into an issue with financing on my own. So I brought in clients of mine. Actually, we'd been kind of chatting, and they said, "Hey, well, if you ever need somebody on a deal, let us know because we've got some money." And the bank didn't like me just on my own because I was self-employed and yada 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 whatever. So with them, we did a 50-50 split, and we each put in 50% of the money, and then my property management company manages it and gets paid. So that one, we did 50-50 and I put in half of the money. And other than that, most of the JV deals that we've done are right down the middle. And usually our JV partners are also making money on the buy, right? So like they're getting a huge appreciation as we finish up the project and turn people over and whatnot. So our 12-plex, for example, my partner came in and he qualified for the financing. He brought in the capital. He actually brought in a slush fund to cover the first set of renovations as well. And I GC'd the renovations on a couple of the units that were vacant. And so we split everything 50-50
very cool.
on that. So yeah, typically it would depend on how the properties go. Like if it was a turnkey multi-unit that didn't really need anything, it would probably look a little bit different. Considering for 2.5 years, I busted my butt getting the value of the building up. 50-50, I think, was quite fair considering he was just bringing in the money, but it would look different depending on the deal, right?
Interesting. Very cool. And who are you going to for lending? Has that changed over time?
It depends. I've done a lot of lending with CIBC. I'm actually doing a commercial blanket mortgage right now with CIBC. I've never worked with their commercial department before. Once you get to values over $1 million, you go to commercial and it's very different. They just look at the properties and I'm kind of an insignificant piece of the puzzle, even though I have to guarantee it. So I'm buying my partner out of the 12-plex, and at the same time, we're blanketing a mortgage on my 7-plex I bought last year. And we're doing that through CIBC. Last year, every mortgage that I did was private money through a broker. It's very expensive. They charge a lot, but it was quick. And when my partner backed out of that 7-plex, I didn't really have time to go through, because it can take months and months and months to get financing on a multi. There's a ton of stuff involved with it, right? So when you don't have very much time and you haven't really already been working financing, money is the best way to go. Like, we're paying 10% on our first mortgage on that property, which is a lot of money a month in interest that I pay. But at that point in time, it was either I don't close on the property and get sued, or I get creative and I find a way. So we're refinancing that right now, but it still worked out. We've increased the value enough to cover the interest that we've paid on that 10% over the last year. So so I use various different mortgage brokers. We use private money as well. So we have private money lenders who lend direct to us. I feel like we're a fairly stable investment for people who want to get a higher return than their GICs or mutual funds. We have people who lend us their RSP funds, and we're professional, right? Like, this is what we do for a living, and we have quite a bit of equity and net worth behind us. And we've never lost money on a deal, so I think people feel quite comfortable lending their funds to us. So always looking for more private money lenders as well. So yeah, we do a lot through that, especially if we're doing flips or if there are big projects that need work. We'll do private money.
Can you give the listener a range of what rates look like? What ranges are for lending, the interest rate, and also any lender fees?
Lender fees. Okay, well, I can tell you that the mortgage that we put together super quickly last year, we did it through a broker, and the fees were ridiculous.
What's ridiculous?
We paid, so ridiculous. I think we paid $17,000 so my broker, I think he got 2%. So he got, I think, about 10,000, and then the lender got, I think, about 17,000. So it's $27,000 in fees to close on that mortgage, and then it's a 10% interest on. They lent me $600,000 about that. So I think our mortgage is like $4,600 a month. So that was at 10%. That's the highest one we've actually ever had. I'll borrow at 10% on a short-term basis. I have other lenders who have lent us their RSPs, and we pay 7 or 8% on those. And they're on more stable properties. It's like, hey, I've got this cash flowing duplex. I have equity. We'll put an RSP mortgage there because it's a stable, completed, already okay property. And if it's RSPs, we'll just put it at like a 5-year term, and then we'll just keep using their money for various projects. If we're actually borrowing on a flip or borrowing on something that is what people would say risky, like a bank won't finance this property, so we have to go private, it might be a bit of a higher rate just due to the risk involved, so closer to around 10.
Right. That still doesn't sound bad. So just for the listeners' benefit, what I usually see is when the bank won't lend if you have any sort of significant vacancy issue, and the banks do not like mixed use. I see that a lot. Yeah.
And like even our cottage, so this place, we had to get a private mortgage on this. We're paying 8.5% on this property because the Schedule A banks didn't like our self-employed income at that point in time. And I don't know that I had my taxes done. I'm always behind on my taxes. So the Schedule A banks didn't want to lend to us. And then when we go to B banks, and it's like, okay, you know what, you'll qualify with the B banks. But then the B banks didn't like where the property was, or that we were renting it out on Airbnb. So we actually I fully disclosed to everybody we're renting it on Airbnb, because I thought, I try and do everything as honestly as possible. And like, if I don't mislead or lie or anything like that, or, not disclose, then I don't have to cover my butt, right? Like everything's out there. And so we had ridiculous insurance, and nobody would lend to us. So we ended up going with a private lender at 8.5%. But now we're refinancing and paying that out, and it's going to be with a regular bank, and it's going to be okay.
Very nice. Very nice.
So,
how's your experience been with Airbnb, with your cottage?
Amazing. It's awesome. Like we've never had any issues. We've had no damage. People love our place, and we've had no damage. We just have it so people can automatically book. Like we don't even screen and turn people away. It's just, do you want to come? Yeah, just come. It's fine. And yeah. Yeah, it's been pretty good though. We get a lot of families, and people seem to really like it. We have repeat guests coming back. We actually lucked out over the winter. We had a solar panel installation company rent from, they were here from September till April, 4 nights a week. So we had like constant income over the winter as well, which I wasn't anticipating. So
wow,
that was pretty awesome.
That's awesome.
Yeah, 4 nights a week, and then we could still rent it out on the weekend or come up on the weekend.
That's
it was
amazing.
Pretty awesome. Yeah, they were here Monday to Friday, basically.
What are your rates? What do your nightly rates range from?
In the winter, I had it at $135 a night.
Wow, that's still
which
great.
Is, and it's, I don't know, $135, and then our summer rates are $300 a night. So
even on the weekend.
Yeah. I know I could increase it. Like, and I made a mistake this year. I thought I'd changed my Airbnb settings. This is a newbie mistake. But I'm like, nobody's booking. Like, why don't we have any bookings for the summer? And people kept telling me, we went on to look at your place and there's nothing available. And I'm like, it's so available, because I didn't block off our space. And I was like, I'll wait and see what reservations fall, and then I'll block off our space. And then I went on and I had it restricted to, you could only check in on a Sunday, and it could only be for 7 days. And I had all these weird restrictions. As soon as I took them off, it like booked up really quickly, at $300 a night. And I'm like, okay, I could have probably put my weekend rate higher next year.
Mm-hmm.
Next year for the summer, I will.
Fascinating. Okay, so we're running out of time, but you've faced some fears lately.
Yes, I have.
Okay, so to let guests know, you shot zombies in virtual reality,
which was terrifying, but awesome.
And you did a walk on a catwalk that was almost 1,200 feet up in the air.
Yes.
Yet shooting the fake zombie was harder, scarier. You're saying? Oh,
it was like being in. I actually felt I felt pretty safe on top of the CN Tower. Like they checked you so many times that like there's no way you can fall, right? So it was high, and it was exhilarating, but it wasn't terrifying. The virtual reality zombie shooting was probably the most terrifying thing I've ever done in my life.
It sucks to know
I have a huge zombie fear. Yeah. But it was awesome though. Like I would love to go do it again, right? Like it was so much fun. But I just remember, and I'm like, I don't think I uttered a single word for like the first half hour, because I was just like, right. Zombies. I was so scared.
I think you finished second too, didn't you?
Oh yeah, I killed a lot of zombies.
Yeah. So
I don't know.
Your hate for zombies translate into violence to zombies.
Yeah, it was good. It was a lot of fun.
Yeah. And you're coming July 25th? Or you're at the cottage?
I'm up here July 25th. But I'll be at your November one for sure. Nice. I will be there.
That'll be a big one.
Yeah. And depending on if you're having an August one, depending on the date in August, I might like we're pretty much up here like most of the summer. Mm-hmm. I booked 2 weeks at home because I figured my daughter might be bored and want to play with other kids and stuff. So she's in a couple of day camps back home, but otherwise we're up here.
Yeah, very cool. I think that's all the must-have questions. Actually, you had a really funny story that you shared back in Halloween. Do you remember what your like go-to ridiculous story is of being a landlord?
I have so many. What one are you referring to?
I don't remember if it was you. Did cops break down the door of one of your houses?
Oh no, I did have a SWAT team, like the drug bus.
Yeah.
Yeah, I had. They didn't break down the door, but I had.
SWAT team just knocked. Can you let us in?
Well, I don't know. I don't think that I think it was unlocked. Maybe. I don't know.
Oh, okay.
But I had one of my tenants call me. I actually had a really fabulous tenant, and he lived in this place, and then he lost his job, and then he started hanging out with some shady people. And my tenant downstairs, single mom, 2 kids, was like, "There's a lot of people coming and going." And I kind of talked to him about it, and he just said his friends were kind of, hanging out. And then she called me one day, and she's like, "Sarah," she's like, "I don't want to alarm you, but like there are people with guns, and they're all around the property." And I do. Yeah, and I'm like, "Guns?" And yeah, she's like, they had like the cars out front and like guys with guns, and they were just like advancing on the property. I guess my tenant's friend was selling heroin out of my unit. That's why all the people were coming and going all the time. And so the dude was like face down, arrested on my front lawn, and her kids are freaking out. And yeah, that was actually, incidentally enough, that's the same unit that our prostitute had lived in as well. So we've actually had some choice. We've had the worst tenants in that one unit actually over the years. But yeah, keeps it interesting.
Maybe you should Airbnb that unit.
Maybe. Who knows what I'll get then? I don't know. We have good tenants in there right now. So I'm like, finally, we bought that one in 10 years ago. That was our second purchase in 2009. And most of the bad tenants come from my being inexperienced at that point. I had no idea how to choose people or what to do. And I trusted that everybody was honest. And I was so naive, so very, very naive. And I gave people lots of opportunities and chances. And, I can't call your references because whatever reason, I've heard all of them and I fell for them. And yeah, I can't call your references because you were actually in jail and you don't have any. I didn't, Anyway, you learn, right? I don't run into many of those situations anymore, thankfully.
That's actually a good lesson when you pull people's credit and you see gaps in people's history, you gotta ask, why do you have a gap in your job history? Were you in jail? Yeah. You don't ask that. I'm kidding. You don't ask if they're in jail. You just ask, where were you?
Where were you? What did you do? And if ever people say, you can't call my landlord because, they're probably lying. So I always call the landlord anyways.
Good tip.
You can't call the one was, you can't call my landlord because we had relations and now he's harassing me and I don't want him to know where I'm going or where I'm going to be. And I was like, oh my gosh, sure, of course I'm not going to call him. And that ended up being the lady who was the prostitute, and she'd been in jail. So she just randomly put people on her application and said, but you can't call them, because she had some really good reasons.
Lovely.
Yeah.
All right, Sarah, one more time. How can folks follow along with you? Snapchat, Instagram, Twitter?
I'm so technologically. I'm not like super social media, but I'm on Facebook, and I actually am on Instagram under my personal name. I don't know how you give out. I don't even know how you can find me on there, but tagproperties.ca is my website, and then under my personal name, I think on Instagram and Facebook. And by the end of the summer, I'm going to have an actual investor website and handle and all that kind of stuff.
And then the money's going to find you, so it's going to pour in.
I hope so. Right now I've got more deals than we can do, and so I'm looking for partners and money, and so I hope so.
What kind of deals? All multis? All in your area?
I've got a couple of duplexes and one multi for sure. I actually have some other multis I'm interested in, but I haven't done analysis on them yet. And then we're looking to start doing some duplex conversions in Cobourg starting in the fall too. So I'm looking to really kind of expand our portfolio and expand our renovation company as well to take that on. So we are looking for people who want to make money.
Awesome. Busy. You can still manage to be at the cottage. That's super awesome.
Yeah, and I only work 15 hours a week, so
right.
So I've got systems. It's all about systems, right? So I do the stuff that only I can do, and I delegate and empower people to do the rest of it. So
awesome. So awesome, Sarah. Thank you again for doing this, taking time out of your cottage schedule to do this.
No problem.
All right. Thanks very much.
Okay. Bye.
Bye.